Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss how to end the year with your feet on the ground, and we also discuss this week in the market.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in Raw.
Featuring Dan, Deity of Dips, and Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Sunday, September the 18th, and this week it was another really down one. I think I just got the New York Times notification saying, let's see, how's, the new worst one of the year for how bad stocks performed. What caused this? I mean, was this just a continuation of how bad the last week ended?
Yeah, I mean, I think that this was, like a pretty big washout. And obviously we talked about that 390 spot. I mean, we closed at that 390 spot. And then today, Friday, we opened up down. And I mean, we were down like 1.5% at one point, hitting like 382. So that's something where, like we talked about, that 390 was going to be a huge spot. And I still think that we chop around there Monday, Tuesday, going into FOMC. So Monday and Tuesday, I'm probably going to be like hands off because I expect us to chop around that key level of 390 because that they're going to chop us right at that key level going into FOMC so that when FOMC comes, it's going to be a quick and violent move, but nobody knows what direction because we're sitting at support and resistance.
So obviously you are leaving for Greece tomorrow, and that'll be Saturday. You're not going to be posting your key levels on Twitter like you usually do. Are there any certain ones you really want to pound? Okay, well, obviously you still are. But are there any certain ones while you're gone and you won't be as active on Twitter that you'd really like to emphasize to your to the people that follow you that you really want to just stick in their heads?
Yes. The really important levels for myself are going to be obviously 390, 379.35 to the downside, and 396.55 and 406. So just to reiterate here, it's going to be 401, SPY 401.06, SPY 396.55, SPY 390, SPY 379.70, and then we'll give like a reach 373.16. Those are all going to be really important for the week. And on the smaller levels while we're here, pretty much the same, but we could, on the upside, we could make stops. Once we're through 390, we could make stops at 397, 401, and 402.45. Those are all pretty big spots. But, put those on your chart, and I'll still try and get out the levels. But those are going to be the spots. And like I said, I expect tons of chop Monday and Tuesday. And then Wednesday FOMC is going to be, obviously the main event.
And how is all this playing with your previous projections of like the 360, et cetera, et cetera?
So last podcast I had said that I had put and that 370 was my first target. I really had wanted us to really kind of have some panic selling going into the weekend close. And so what I just decided to do was that I basically decided to close them for like a 60% gain. Again, it didn't hit my first target at 370, but it hit 382. From 400, it's more than 50% of the way there. And I was happy with it. There was literally no decay on the options. It was Tuesday, and Tuesday I got into it, and it was about a 5% short on SPY and made about 60% on the equity. There's nothing that I could be, mad about that trade with,
Yeah. And as FOMC is coming, I know you kind of mentioned your plan for it, kind of like laying off the brakes. If you were at your computer for the whole thing, as you usually would you play this any different, or are you just kind of sticking away from it solely because of the situation you're in as you're kind of away from the computer?
I would probably trade it, but I would trade it with like 20% size. Like enough to make lunch money, just to be in something. But that's it. Nothing that could ruin my week or my month.
And I think it's another good thing to kind of dive into about and this can help people that either have jobs while they're trading or if they're doing something while they're trading. How do you change your strategy up whenever you are, away from your computer for a long period of time, like on vacation or doing whatever, responsibilities you may have?
I just look for the bigger moves in the market. So same thing, like I look for failed follow through on a smaller time frame. I'll look for failed follow through on a larger time frame. And then it's just about, it's the same thing, like with my SPY short, that was on a really large time frame, and that was something that I was prepared to swing up for up to 4 weeks. And so instead of taking 2 weeks out, I went 2 months out. And that it just ended up working out, beautifully, obviously, and making making a lot. But that's a certain situation where I'm looking on a larger time frame. I'm expecting to swing it, and I didn't even end up having to do that. And but that's something where honestly, sometimes all the time, that's an oxymoron. Sometimes all the time, I think about just playing the larger time frames, because honestly, that's when I do the best, because the setups are so fluid and they're so, the moves are so large. So even, something like this where I didn't capture, where, I'm not going to capture that full move to 370, I still capture a really nice win.
Do you find yourself ever kind of losing out due to theta decay? I mean, I know you kind of started doing these longer out options as you're talking about, but, one thing you can have an issue with in these things is, as time goes on, the theta decay just gets worse and worse and worse. How exactly do you play against that?
Yeah, I mean, I just the more time, the better, in my opinion. That's why I'll go. If I'm expecting to swing it for 4 weeks, I'm gonna go for 2-month options. If I'm expecting to hold it for a day or two, I'm going 2 weeks out of the money, and that's just to ensure that there's literally the least amount of decay possible.
Yeah, but still, 2 weeks decay. It could go down 5%, and it could just about be screwed.
If SPY were to make a 5% move,
just for SPY, I get, yeah. But even we saw it make a 5% move just 3 days ago.
Yeah, no, you're right. But that's the thing, is that that's when the legwork and the homework needs to be done, and it's like, am I gonna swing calls into CPI? No, because that's 75% of the move right there, and then the rest of it was just follow through. So those are situations where you got to be like a heads up player, in my opinion. But like I said, is that most of the time I'm scalping with 2 weeks out of the money, same day, or holding it overnight. But again, typically I'm taking some off the top, and that's just the way that that I like to play. I'm playing SPY for $2 one way or the other, and going that far out of the money. Again, it can happen where we get like a massive move out of nowhere, but that's like one of those like once in a blue moon. If it happens, oh well, and move on.
Okay, so one thing we wanted to talk about on this episode was how to kind of end the year so you can start the next year with your feet on the ground, kind of get momentum ending 2022 so we can get it going into 2023. Obviously, there's a lot of different ways to do that. Where do you kind of want to start with how you can end this year the right way so we can start the next year even better?
So, so that's a great question. I think it's really important because this summer was exceptionally slow, and of course with SPY, getting smoked in June and July, and all this up and down turbulence, it's been really wild. And so that is definitely something that I wanted to cover into the end of the year. We got a good solid 3 months left. And now that all the hedge fund managers are back, everybody, it's going to start getting a little bit chilly out, inside the Northeast and everywhere else. And so, people are, less daytime inside America, and so people are going to be inside more, and they're going to be working, and so this is the time to capitalize. So I think that there's, I think there's 3 things that you can do to capitalize into the end of the year, and the first one is going to be, and this comes back to a quote that we've talked about a few times, but it has nothing to do with trading. However, I think it's really important, and that quote is that 20% of your workers produce 80% of the revenue. And the way that I kind of look at that quote for trading is that 20% of your trades make 80% of your gains. And so I'll say that one more time. 20% of your trades, I already messed it up. 20% of your trades make 80% of your gains. Okay, and so I want everybody to remember that it's way more inside this game about quality than quantity. Now you can do different things, with quantity over quality, but, for most people, it's going to be way more about choosing those really good trades, the ones that are going to make the difference inside your account, those A+ setups. It all it takes is 4 or 5 to make your year, really good setups. And again, it's not about how much you make, it's about how much you keep. So you can have, as many 2000% bangers as you want, but what's the cost to get you that 2000% banger? Is it like a 10% win rate, where like you're just throwing at 0 days every day? So that's something that I think is really key, is point number 1. 20% of your trades make 80% of your gains.
Okay, so, and that is going to be the first one. And I think that's a good one just because, so many people started trading when it was the hottest market ever, when it was, it was more about, which ones are you in instead of like, which ones are you not in? So, kind of figuring out the right ones to be in, et cetera, et cetera. Because you're right, it is more about the quality than the quantity, as opposed to just 2 years ago where it was just like, hey, it's going to go up more off a PR than it's going to go down off an offering. So let's just fucking roll it,
Yeah. Yeah, no, exactly. So that's number 1. Number 2 is something that that you guys will hear me. You do hear me talk a lot about, but it's everything outside of trading affecting your trading. And this is really important because a lot of us will allow ourselves to put our self-worth based on our net worth or based on our trading and how that trading is going. And that is extremely unhealthy. And why I say this is because, like, I even know myself, I could be having a great Monday, a great Tuesday, a great Wednesday, and then all of a sudden I take a really piss poor trade. Okay? Let's even take this past week. This past week, I sized up a little bit, I'm in puts, or I'm thinking I'm in puts, it's coming up to my target. I'm like, oh man, these suckers are gonna be up like 15%. Like this is gonna make my month. Like I got puts, I got the November puts. Those are gonna be up sick. It's gonna be great. I open up my brokerage and it says down 13%. I'm like, whoa, what? And I take a look. I bought calls instead of puts. And even though it's not something where it's like, does it stink? Yeah. Like, did it take away a lot of my gains for the week? Yeah, especially because I had sized up into that trade. But on the flip side, did the strategy work? Yes. Like, did I blow up? Not even close.
The thing is, I mean, like, you were right, you just weren't right.
My execution wasn't there, but everything else was. But even something as small as that makes me want to interrupt, what I'm doing with my day to, I don't want to say go feel sorry for myself, but again, it's like, oh no, like I've lost a few $1,000s, like, now instead of like eating healthy or going for a walk, like all of a sudden I just want to play, video games and order Chick-fil-A, and so all of that is because what did I do? I bought the wrong option, and that is so unhealthy. And so, if anyone out there is like myself, I definitely, and something that I've been really trying to work really hard on is not tying my self-worth to my net worth. That's number 2.
Oh, hey, I think, but still realize that, we are in this to make money. And so don't, feel sad when you lose money too. You got to make it feel real somehow. But just don't beat yourself up over it. You've been in the game too long to let yourself get beat up over it. So now moving on to number 3 for kind of getting the ground rolling. Do you have anything for specific trades, finding out? I know you were talking about those A+ setups and making sure they're all quality. Do you know, like, how do you feel like going about finding them to end the year is going to be changed as opposed to like during the summer when it's a little slower and everything?
Yeah, so the one thing that you want to look at, and this is I don't want to say a foolproof, however, this is something where if the market is good or if the market is up or the market is down, there's a few things that you can capitalize on. And so number 3 is how exactly we're going to go about finding traders or finding the good trades no matter what kind of market we're in. And I know it sounds too good to be true. I get it. But this is really important because if the market is down and getting smoked, what we're going to continue to look for is those names that are showing really good relative strength. And so one of them right now is Tesla. We've been talking about it all week. Tesla is like flat on the week while like the S&P 500 is down 5%. Tesla down 4% while the S&P 500 was down 4% on Tuesday.
For newer people, why do you think relative strength is good? Like, shouldn't that just seem like, oh shit, well, maybe this stock just needs to drop and I'm just going to get in it even though it's, everything else is dropping. Shouldn't this drop sometime soon?
Yeah. And that's definitely something that, and see, this is why like trading is not as like I like
black and white. Yeah,
exactly. Like I like trading black and white like that. Like, that would be a freaking dream. However, it just sometimes it's not the reality. And sometimes you could sit there and be like, hey, Tesla's showing relative strength. So when the market goes down, this thing's going to drop because it really hasn't dropped the last 3 days with SPY. On the flip side, you could be like, oh, I'm not touching that thing. That's got relative strength. And that's where it's like all these different situations come into play, depending on, what the different surrounding variables are. And it's always important to keep on, to keep that inside the back of your mind. Now, now the one thing that I will say is that pretty much I would be looking on larger time frames. So I would trade intraday, but then also when the market bounces, and I mean like we see like a good bounce, like the one that we saw maybe like 2-3 weeks ago. It'll bounce 30, 40 points. That's where you want to have your list of things that are showing relative strength over the last few months, because those are going to go that much further, So like ARK was like actually up on Tuesday while the rest of the market was like down 4%, So those are the ones where, okay, well now if the market has a green day, ARK is going to be up like 4% while the market's up 1%. Or NIO's another, Rivian. Like all the EVs, which again ties in with Tesla, have been, showing really good relative strength. So it's something, to think about, and something that, sorry, I was just reading something. And something to always keep, always keep an eye on. So again, is that when the market's going down, if you don't really only like to play the long side, that's fine, but keep really good eyes on your favorites so that when the market does rally and does rebound, you're there. Like you're there and you capitalize and make your year inside that few weeks. That 40-point bounce, when growth bounces 30%, you make 30% on your account. Those are the times. When preparation meets timing, that's when you get explosive gains on your account.
And these are moves that you're saying you're holding for months, even years to get that 30% move?
No. I'm saying when SPY bounces 40%, in 2 weeks, that's when, growth is going to bounce. If SPY bounces 40 points or, 8%, growth is going to bounce 30%. And that's when, instead of like throwing 5% of your account, that's when you want to be spreading your entire account over, maybe 10 to 12 names that you know really well and you've been preparing for this,
Yeah, and how do you think you should kind of pick out your little portfolio of growth stocks? Like, I know you said to look up the ones with relative strength and do this and that. Are there any other, like, quote unquote, foolproof methods that you like to use to kind of find those?
Yeah, so really it's just about scanning through different stocks. And someone who, we've talked about a lot recently is Simple Ariel. Scan through stocks, scan, because the more that you scan through stocks, the more that, you're going to get better at watching those stocks. Your eyes are going to start to pick up which ones are holding really well, which ones aren't holding that well, which ones have good setups, what setups work better than others based on, different time frames, all those types of things. And the only way that you're going to get better at that is if you just scan all the time and just, have 70, 80 charts that you're looking at all times,
Yeah. And do you have any other way that you think is a good way to kind of hit the ground running like we're talking about before we kind of get into our next little segment?
Yeah, and the last thing is just going to be is that, listen, if you've gotten smoked over the last year, find some traders that, because listen, there's been a wipeout of traders recently, but find some traders that you really, really, I don't want to say trust because I don't trust anybody on Twitter, but find some traders, whether it be on Twitter, whether it be hedge fund traders, anybody, and just watch what they do day in and day out, because that is going to be something where, it's kind of like your circle breeds your success. Like your friends are who you hang out with, kind of, or the friends that you hang out with are who you are. Yeah.
You're the even of those.
It's the same thing, like if you're following somebody really closely and every day, they're reviewing trades at 4 p.m., 4:30, and you want to pick up that habit, do the same thing as them. And the only way that you're going to do that is if you reach out, if you talk to them, if you have notifications on, stuff like that, just kind of mirroring every move. And then once you get really good at that, then you can kind of take your own spin to it. So you can say something like, hey, my mentor likes this, but I kind of want to see how this works because I'm noticing a pattern. And maybe you might even improve their strategy. There's so many different things that you can do. But the biggest thing is that I would block out all the noise, focus on a few traders that you really you think their style is something that you can really grasp and something that works well with your personality, and just go for it.
All right. Well, now kind of moving into a viewer question we have. And I think prior to moving into that, I think like Hugh said is, with the wipeout of traders recently, and that's a very real thing, is the fact that just staying alive, like keeping your capital, having a backup fund in case things go bad, making sure you're putting some in your savings account. Like, don't let all this go to waste. That's the worst thing that could possibly happen is if you make all this money and then you just lose it all in trades too. You don't get anything out of it. And all you get is, I traded for 2 years, and then you just have a fucking decent story to tell that's kind of sad, So
yeah,
I think that's one of the biggest things is just make sure you're maintaining your capital and always have a backup fund. You don't want to make your whole trading journey end up just being for nothing. So a little viewer question we have is, hi team. This is from Ramon. Hi team, what are stock warrants? How do these warrants differ from stock options? Once again, thanks for what you all have done and doing right now. Thanks for listening, Ramon. So are a bit different than options, but I think if you were going to put one comparison in between them, it would be, I think they're probably be the most similar versions of playing a small cap version of another stock. Did you kind of... I think that's the if you were going to compare any part about them, if you want to kind of dive into the specifics and the differences of warrants and options.
Yeah. So the thing with warrants, okay. So here's what we have to understand is that warrants and options both have an expiring date. However, warrants have and they both have an execution price. Warrants are a little bit strict because typically that price has to be reached. Now, sometimes, if you have like a little bit of a interesting board, we'll call it, then they might lower that execution price. But for the most part, when you buy warrants, you're either trading them for the premium, like, same thing like an option. You're just going to trade it for that premium, or you're going to trade it to execute the warrant or to execute the option. So they're both the same. However, I will say that typically warrants are used differently. And what I mean by that is that warrants are typically used by institutions to either short a stock that they're long, kind of hedge. And then also warrants give a really good indication of the financial health of the company. And also warrants are really important because let's just say that a stock is getting close to the warrant execution price and that it has a shit ton warrants out. Well, that's going to be important because if it gets to that price and everybody that's holding warrants is looking to get out, what do you think is going to happen when it hits that price? It comes down to simple supply and demand. If there's too many people executing on the warrants, that's going to drop the price. So as a stockholder, as a trader, I want to always keep that in mind. And then the last thing that I wanted to touch up on warrants was that warrants can be really useful to trade premium, just like options, because sometimes the pricing can be at a discount or it can be at a premium. So let's just say that a stock gets bought out for double its share price, all cash, like really simple all cash, double the share price, blah, 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 like somebody really wanted to acquire the technology. Well, the stock price is instantly going to shoot up. However, sometimes there's a delay in warrants. Now that's, going to be a really tough one to get into because it'll shoot up instantly. However, the other way is that if the stock does do well, especially small cap growth stocks, you can play warrants for the premium really, really well. And again, is that there's typically a little bit of a lag between the stock price and the warrants. And so that's something where, if I see like a growth on news just booming, I'll go right to the warrants and see what the warrants are doing because sometimes there is a little bit of a lag on a discount.
One more thing we can talk about before we, leave for the week. With a month left until the date to pay your taxes if you filed an extension, which is 6 months after April 15th. I think a good question would be for those that really came up on them, how are they going to maybe set up quarterly tax returns? And can you kind of go over the benefits and why they should do it as traders?
Yeah, so the benefits of quarterly taxes are, first off, You make your gains, you pay the IRS, and now you don't have to worry about ever owing anyone. That's going to be the biggest thing. Listen, I've been in situations in the past where I've had a really good first 6 months, and then in August, I lose like half of that, or even let's just say that you have a really good year, and then February comes around, and you get freaking smoked. Well, when you get smoked, what's going to happen is that you still owe that taxes. So let's just say that you make $100,000 and you owe $60,000 of that to the IRS. Well, what happens if you lose $50,000? Now, not only do you lose all your gains, but now you also owe the IRS money. And that is the absolute worst thing inside the world. And that's something that you want to avoid. So paying quarterly just handles that. The second thing is that, and this kind of ties into it, but you just don't want to have to worry about it, and the last thing is that invest in a good CPA. Okay. Invest in a good CPA. They're so important. They're worth every dollar, because I'm telling you guys, you don't want to mess with the IRS. You just don't. You just don't want to mess with them, especially they just gained 80,000 new workers or something. So the last thing, and hear this in your sleep, do not want to mess with the IRS. Just hire somebody, make it happen, and be done with it.
Yeah, if Al Capone can't do it, dude, neither can you. So, yeah, just don't fuck with the IRS, dude. They stink. Okay, guys. So here's the plan. We are going to record another episode tomorrow, which is Saturday. Hugh's going to Greece. We have an evergreen episode for Wednesday. That's all Q&A. You guys had shit tons of questions, so we're going to drop all those. And then we're going to figure out something for tomorrow. I'm not sure if we're going to do Roth, maybe more fundamentals. Maybe we'll ask on Twitter what you guys want for Sunday, because it won't have This Week in the Market, but it will have a great topic for you guys to listen to. So hopefully you guys will enjoy that. Thanks for listening. We love you. See you next time. Bye.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.